So, we now have a panel discussion, and this panel discussion has special relevance for humans. I think I see one or two in the audience. Sorry, Karmela. So here to talk about human capital, future skills for central banking are Joseph B. Fuller, Professor of Management Practice in General Management and Entrepreneurship at Harvard Business School, and Tim Hermans, Member of the Executive Board and Director at the National Bank of Belgium. Moderating the panel will be Karmela Holtgreve, Head of Operations and Deputy Head of the Innovation Hub. So Karmela began her career in financial journalism before moving into public affairs and later into strategy and innovation. Before the BIS, she was Director General for Strategy and Innovation at the Bundesbank. Karmela, all yours.
Good morning, good day, good afternoon, depending on where you are, here in the room or somewhere else streaming our session. I'm very happy to have two very distinguished speakers with me on this fireside chat, exploring discussions on impact of technology on organizations in two folds. One is, what is the impact for the workforce, the skills we need to fulfill our mandates as central banks and supervisors? What do we need to know to be able to work with the market, to work with market participants, to anticipate, as we heard yesterday, and not be reactive but proactive? How to influence our policy decisions in the best possible way. And the other part, and that was reflected upon earlier today in many ways, is the practical approach we as organizations need to take in terms of how do we organize ourselves, how do we skill ourselves, how do we obtain organizational efficiency. Both aspects are important. Both aspects were already mentioned many times today. And I'm very happy now that we can share this kind of focus on human capital from two perspectives. A profound academic perspective, and I'm very happy to have Joseph B. Fuller with us, who's a professor for management practice in Harvard Business School, and I found that work of Joseph particularly interesting, set up and founded the Harvard program on the future of work. And the future of work in many kinds of aspects, your research aims from the skill gap. How do we, on the one side, have many institutions and organizations looking for labor force, and on the other hand, we have many unemployed workforce out there. And also kind of what will the impact of AI be on human capital and the economy at scale? And then I'm very happy to have a practitioner, a policymaker, a very experienced central banker with me, Tim. Tim Hermans is member of the executive board at the Belgium National Bank. In this capacity, he's responsible for the IT work of the NBB, but also for the work on the digital euro and the surveillance of financial market infrastructure. So a lot of topics we tackled on today already. I'm very happy to start now and dive into the topic with a question to Joseph. Joseph, from your research, we understand how technology, and particularly AI, is set to reshape ecosystems, raising critical questions about will it serve us as a catalyst, or how can it serve us as a catalyst, surging productivity, supporting us in taking even better decisions? Or will it lead to widespread and job displacement? How do we handle fear among our co-workers and colleagues? How is this, from your perspective, your research, but also your work with the industry? What would your perspectives be on this?
Well, I think it's actually going to do both. And so the short answer to your question is yes. Most of the research being done on AI has focused on the impact of AI on specific roles and jobs. And we're now doing some research we'll publish later this year to take an analysis of the productivity enhancement potential of AI in individual positions and map that analysis on top of organization structures of big commercial enterprises. We've created maps of 6 major industries, how they actually look today, which is a strange thing. It's not easily available. That was 800 million observations and counting. And when you map AI's potential to automate or augment the work in those structures, you regularly see a couple of phenomena. The first is, in many industries, the roles that have been defined over time, most of these industries are quite mature, so the positions that they're built on have evolved over time, get dramatically reshaped when you apply AI. Our model for the 900 so-called ONET codes in the United States, the 900 jobs the US government tracks, is a 41% improvement in productivity over time. You map that into specific industries, and the shapes of the industries start contorting. For example, for many of the sorts of jobs that we would aspire for our children, cognitive work requiring significant academic accomplishments in elite institutions, a significant pinching of the bottom of the talent pipeline, with much greater rewards to people with 8, 10, 15 years of experience who have developed the heuristics to be able to develop a good dialogue with AI, to write good prompts, to spot hallucinations. But you can't have someone with 15 years of experience 14 years from now if you didn't hire a new worker. So if you have companies gravitating toward efficiency, it's going to distort the geometry, if you will, of organizations and begin to put a crimp in the experience base, the maturation of talent required to get the most out of AI.
Thank you. And Tim, from which I think is a great way to bring in your perspective. The NBB is very recognized for its kind of strong technical capabilities. But when you hear what Joseph has to say on how is it shaping the skill sets we need to have today, but also how do we prepare for a kind of unsecure or future that we do not know to tackle 100%, how do we prepare our workforce to be ready to have the right skills that we can and stay ahead of the curve? What's your approach at the NBB?
Well, maybe let me start by saying that central banks are under real pressure to modernize because we all see these new technologies and they are reshaping the financial sector. So we have to follow, we have to adapt. But it's very difficult, it's very hard to introduce those new technologies, specifically for central banks, because for ages we have been guardians of stability and so forth. So we need another mindset. And what Joseph said, I see this in the bank. We talked about the risks today, yesterday. AI, for instance, doesn't remove risks. It amplifies risks. We talked today about model risks. AI sometimes is a black box. We talked about data privacy risks, especially in the EU. We have this very strict regulation, GDPR, so that's very difficult to use AI when you have this kind of strict regulation. We have like operational resilience risk. It's very easy, and someone talked about that, to make a malware with AI. So we have these risks that we have to mitigate, and we have to reskill our labor force for that. Because as Joseph said, it's very easy for instance, young people to come into an institution and they can, by using AI, do the work in one day that 10 years ago they could do in 10 days. You get all these kinds of reports, you get these supervisory reports, you put them into AI, and AI gives you back some analysis with an indication of risks. But you need the expertise, you need to know, you need to be able to check from your expertise whether or not these results are valid. And for that, I mean, yeah, you have to be a subject matter expert. And how can you become a subject matter expert if AI is all about productivity and efficiency gains? For me, and I'm a bit in a discussion with my governor on this, we are doing our annual budget exercise, and we have the promise of, well, with AI, we can reduce our budgets with like 10, 20% because AI is doing the work. And that are real efficiency gains. So you do the same with less of a budget. For me, that's not the right kind of efficiency in a public institution. I mean, obviously, you can reduce budget by a little bit, but what for me is a good efficiency gain is that you do better with the same budget, that we try to have better analysis, that we really shape cross-functional teams that learn from each other, that have this like cross-fertilization, to have deeper analysis, to have better results within the same budget or a bit decreased budget. So these are really the things that we're talking about also in our bank. How can we use AI to be better, and not only to have good sounding text with a lot of difficult words that don't mean anything, because when you're using AI and everyone is asking the same questions at the same models, you will get the same answers. And if you don't have the expertise and the capabilities of distinguishing between a real answer and just text, we all getting like these briefings and we're all saying the same thing on conferences like this, and then you get into a feedback loop and you can create echo chambers, and at the end of the day we believe maybe it's something that's not true. So that's a real risk, and we have to change the organization to deal with that.
If I may follow up on this and then come to you and your broader perspective on this, Joseph. When I listen to you, and it's reflected in the panels beforehand, we do not only talk about technical capabilities and skill sets, we talk about critical thinking, about creativity in workforce, about how to ensure that we are capable of asking the right questions. How do we tackle inconsistencies, or as a colleague from my always says, how do we distinguish snake oil from real substance? You know, how do we make that? And when you look at this kind of challenges ahead, and on the other hand, first time in decades, central banks face budget restraints, how do you combine that?
Well, we have to change the way how we make teams. We used to value like really big experts that worked in isolation in their own silos, and that was the best staff we had. So we could send someone to a conference, made a really big speech, and that we valued really, really a lot. That we have to change. We need to build these cross-functional teams. We need to put young people and not so young people together, people with less experience, with a lot of experience. We need to put engineers and economists together, policy analysts and maybe supervisors. And what we are trying to do at the bank is design thinking. So we put these teams together and we ask them to solve real problems by analyzing what is the problem, by low coding things, using tools like Power Platform and stuff, to really build low code solutions. And with that you create the curiosity within the teams and you build from the bottom up. So it's not top down, you build from the bottom up and you create real ownership with those teams. And with that you have like these experienced teams that can tackle and really assess the answers from AI. That's what we're trying to do. But it's very hard because everyone is now asking for AI talent, data scientist, IT talent. Demand for those profiles is exploding. And at the same time, we see that for a lot of people at the organization, it's very difficult to have them in training programs, specifically older people. And those are challenges that we have to tackle.
Thank you, Tim. And Joseph, quite a lot of your research also emphasizes the importance of an adaptable approach to talent in the digital era. And you refer to many industries that also failed in setting the right strategies on how to shape the right composition of human capital against the background of, let's say, have more diverse teams or diverse perspectives. What would be learnings from your research that you could share with the central banking community on how to better tackle the challenges ahead?
Well, the first is something that was referred to yesterday, Karmela, that this is a conservative industry that has a long history and is reluctant to make sudden changes because of the potential impact on its effectiveness. And what AI does is cause people to have to rethink the fundamental process by which they accomplish some purpose. A lot of institutions, including some of the references here in banks, is how we're using the technology to improve an existing process. That's a legitimate application, obviously, but that's treating it like it's just the next software as a service platform. The power of this technology will only be engaged when we re-engineer the process to maximize the exploitation of what the technology is actually good at. And what it's good at is relational, routine, rules-based decision-making, where there's lots of longitudinal data. Another thing I just take a quick sidebar comment on is that the evolution of the architecture now is arcing more toward LLMs riding above multiple smaller language models, which are deeply trained. A lot of hallucination comes from the fact that I'm in this large model. So there is James Bond, bonds, familial bonds, and I can get confused as the LLM with all of those references to bond. In a small language model, which can be very, very tightly controlled, going back to what we were saying about MRMs in the last session, and where you can regression test the model with lots of synthetic data to find biases, you can control to a degree the threat of hallucination. So also, when there are problems in technologies like this, it's a beacon for entrepreneurial activity. If we know that there are problems with explainability, someone sees that an opportunity to become a billionaire, and they start working on it. So we're going to get some solution to these problems. But in terms of what organizations need to do, first of all, with this technology, we have to put much greater attention on retention. Turnover of experienced middle management, upper management will be much more expensive than it has been traditionally. We're going to have to redefine entry-level roles, because many of those analytical, entry-level, financial analyst, credit analyst, consulting analyst jobs that we aspired maybe for our children, or maybe many of you had as your initial job, they're going to be significantly contained now and reduced by AI. So if we just said, well, we don't need any more of those, well, how are we going to replenish our organizations? We have to redefine the role to be more accommodating of AI and include tasks that AI isn't good at yet. We have to change our recruiting guidelines. So the type of ability to work in design thinking type settings and team type settings like you were describing becomes more important. That should be a criterion related to social skills, communication skills, problem solving skills should become more heavily weighted in our selection criteria than merely technical skills. Our research shows that about 29% of jobs in the United States will be either significantly reduced in the short term by the presence of AI, or have a much larger applicant pool because of the technical tasks that required very specific credentials and deep experience are now being done by AI. So I don't have to constrain my pool of people I'm considering, seeking people only that have that exotic credential. So the opportunity we really have to reform the way we think about talent management, talent sourcing, and talent development. And as mentioned earlier by almost all of our last panel members, we have to get, as big institutions, better at reskilling people. If you just look at software writing, Claude Code, which is the Anthropic core engine for software writing, after it was launched, it was downloaded 2.5 million times in 8 months. Cursor, which is one of the big applications that it rides on Claude Code, reached $100 million in revenue in 7.5 months. That's happening again and again and again. So what we're beginning to see in these types of cognitive tasks you do is that the innovation cycle is faster than the mean time to learn how to master the innovation. We've never had a situation like that in technological history. So you're not going to be able to play the spot market for labor and hire some highly skilled person because you finally figured out that you actually need some cyber people. Too late. Too late. So now we have to start hiring for and creating policies and practices that overcome the nervousness and fear people feel when they're told they have to master something new to them. So we're really going to have to revisit the way we think about talent broadly and not shy away from that challenge, because to delay too long here is going to not only frustrate your funders, but also leave you with some much bigger problems as malefactors are using this technology in ways that could threaten the regimes that you support and supervise.
Tim, when you hear that and reflect upon your senior management at NBB, do you feel prepared in terms of tech savviness and tech and digital literacy on decision-making levels? Because if you reflect on this, on how to be able to adapt in a very flexible manner your workforce over and over and over again, because the development is just so fast, you need to feel comfortable with these developments yourself, at least at some level, right?
Well, the short answer is no. I mean...
Honest answer, too.
Well, let's be honest, for many years, IT has been just a cost. It was not an investment. And it was difficult, it was not sexy, it was for geeks and nerds, it was not for top management. Now with the new technologies, everyone understands that it has become important and we need to talk about it. But I have to say that when I look at top management in my institution and also at board level, we are honest about that. We ourselves say, well, we don't have the skills, we don't have the knowledge to discuss with our staff really new technologies, what are the consequences, what is the impact on the organization. And luckily, we know that we don't know. So what we have done at the bank is, just a few weeks ago, we have asked our staff to put together a training program for the board to understand all these new things. Because when we have these kinds of discussions, also discussions on another level, at the ECB level, often we have the observation, well, we have discussed or my governance says so, we have discussed a very technical topic. I'm not sure that everyone understood. But we are the ones that have to make decisions, and we have the ones that have to steer the organization and give guidance to our staff. So that is a real problem. It's not only about staff and junior staff and maybe more senior staff. It's also, and maybe in the first place, a problem from top management.
I think this is universal in industry. Our data in our research project shows that the people who feel they have the best grasp of generative AI are senior executives in large companies. Many of them are graduates from school. I know many of them. They don't know what they're talking about. And I think this is also a supervisory issue, because you're going to have decision-making processes in institutionally important banks which are not necessarily governed, I don't mean in a rules-based governance, but have a management system and a board structure that is equipped to understand the consequences of some of their choices, up to and including overly harvesting efficiency gain opportunities early in the cycle to maximize period profitability and start driving expertise out of these systemically important institutions before they really understand how this technology is going to play out. Just a quick story. When electric generators, dynamos, were first introduced in the late 1800s, companies installed them directly next to their steam engines. And then gradually companies started to understand that electricity had different properties than steam power. Mills were multi-story because steam likes to go up. But it created all sorts of internal logistics and materials handling problems, moving things up and down a factory. So some companies who were observing how the technology actually worked finally figured out that electricity doesn't care, it just goes with a wire. So suddenly we could start building single-story, larger flat factories with much better quality control, much better materials flow. So both in your banks, but for those companies you supervise, don't let them go down that path of installing the AI just next to the SaaS system or next to the ERP system and just assuming it's all code, so it's all the same. This is the most important commercial technology since controllable power, in my view. And it's got a great potential to unlock big productivity increases in your economies, which are strictly necessary given the problematic demographics of a lot of countries. We urgently need higher levels of productivity to overcome the dependency ratio problem. But that's not going to happen if it's treated like steam engines and dynamos.
This can sound a bit nervous, at least it could make someone nervous, but it can also come with opportunities, I think, for creating a more sustainable, a more forward-thinking approach to core missions of central banks. Tim, I mean, we heard about it yesterday in the panel with Andrea and Eddie and Martin, where both said at least 2 times it's about establishing a forward learning culture as a core mission for all of us to ensure we are up to the tasks. Would you kind of echo that in context of this kind of really big challenges of skill pursuing and creating on all levels?
Well, absolutely. It is a cultural shift on different levels. So we need really to go from this control and compliance environment to adaptability, to learning on the go. We need to go from working in isolation, having great experts but that don't cooperate with other ones, to building these cross-functional ecosystems that can solve problems. So that's really important. We also have to go from absolute certainty to getting comfortable with some kind of uncertainty, not a lot of uncertainty, but some kind of uncertainty. And that's really important. Another thing is, to quote maybe Francois yesterday, I am a European central banker. If confronted with a problem, we regulate it. So that can help as well when we are talking about what Joseph said, don't let banks have models they don't understand. Well, we have a piece of legislation, the AI Act, that sets rules for explainability, transparency, for really important models. So that's important as well. So it's a combination of different things, but it is a big cultural shift, that's for sure.
Well, I just had a point. This afternoon, we're going to talk about collaboration. We're going to have to redefine breadth of collaboration and the topics we collaborate on. Now, BIS plays an essential role in giving virtual scale to lots of banks and tackling common problems, just to be commended for that. But just as we need a different way to think about work processes within the enterprise, we're going to have to think about collaboration across enterprises and regulators and the regulated in order to get the type of teams and insight and network effects that you're talking about, I think. And as we talk about collaboration this afternoon, I'm hoping to hear more about how that can be achieved, because you supervise and regulate and provide guidance, and they do, and there's a dialogue about that. It's not going to be enough going forward.
I learned so much in this conversation. Let me try to bring in my 3 major learnings, and maybe you can share your learnings as well. One is the importance of knowing what you don't know. Yeah? Being aware that there's a lot you don't know. And from that, you can move on. The necessity of creating even more capacity for adaptability and moving comfortable in an environment that is uncertain. And the third thing is the continuous need for real subject matter expertise. That would be kind of my takeaways. I would love to hear, before we close this session, your.
Well, I can agree with you. And maybe one last thing. For me, it's really important that you define the right risk appetite. It's also important to signal to your staff that experimentation is a good thing, that you create safe fail spaces where you can experiment without risk to the credibility of your institutions. So that's important as well, I believe.
I would just say quickly that any form of revolution, a scientific revolution, a political revolution, arise and break old paradigms. So if you cling to your own paradigm in a revolutionary period, bad things happen.
Thank you. Thank you very much for this very thought-provoking discussion. And if you have further questions, both speakers are still here later on in the break. Thank you so much.